Hello, welcome back to the Agile Show, where we educate and entertain. If you are new to this channel, please subscribe, like, share and comment on our videos. So today we'll be checking on marginal costing, and we'll be checking on this calculation here where they're saying a manufacturing company produced and sold 10,000 units during the month of May. The following additional information was also provided. So we have direct materials, which was 8 shillings per unit, direct labor 4 shillings per unit, variable overheads at 2 shillings per unit, fixed overheads for the month of May was 36,000, and selling price per unit is 20 shillings. Prepare a statement showing the marginal cost and profit or loss for the month of May and calculate the break-even point. So the first thing you need to know in this calculation is to get contribution. Contribution is given by sales minus marginal cost. So we're starting by stating, remember these are units, then we have selling price, then we have the value. Remember this side we are having what's called marginal cost statement. Now, so we're starting from where we have sales. We said that contribution is given by sales minus marginal cost. So our sales is equal to, remember it was 10,000 units. It was sold at 20 shillings. That was our selling price per unit. So the value here will be 10,000 times 20, which is 200,000. Then we less marginal costs, and marginal cost here we said is made up of direct material, direct labor and variable overhead. So we include them here. So you have direct materials, you have direct labor, we also have variable overheads. So remember, direct materials in our question was given by the charges there was actually 8 shillings per unit. So multiplied by 10,000, which was the total number of units there, we have it as 80,000. Direct labor was charged at 4 shillings per unit. So times the total units there, we'll get it as 40,000. Then overheads was charged at 2 shillings per unit. That will bring us to get 20,000. So if you sum all this, we will be able to find 140,000 to be our marginal cost. So the difference between sales and marginal cost will be our contribution. So our contribution here will be 200,000 minus 140,000, which is 60,000. Now to get our profit in this case, we are going to less fixed overheads, which in our question here was given by 36,000. So to get our profit there, it will be contribution minus fixed overhead, which is 60,000 minus 36,000. So the profit here comes to be 24,000 shillings.